ready to deep dive into the world of Indian chemicals and fertilizers.
Let's do it.
We're unpacking Deepak Fertilizers and Petrochemicals Corp Ltd's second quarter results for fiscal year 2025.
We've got reports, presentations, the inside scoop.
A whole 9 yards.
Exactly.
Now, Deepak Fertilizers, they're not just some small player, are they?
No, they're not.
They've got over 40 years of experience and operate across 3 major business verticals.
3 big ones: mining chemicals, crop nutrition, and industrial chemicals.
So with a market cap of roughly $1.6 billion, it's a company worth understanding.
Absolutely.
So whether you're thinking about investing or just curious about how a company with its hands in mining, farming, industrial chemicals is navigating the current economic landscape, we'll make sure you leave this deep dive feeling informed.
You got it.
The big question we're going to tackle is this. Deepak Fertilizers claims to be transitioning from commodity to specialty products.
Right.
But is that actually happening?
That's what we're here to find out.
Let's dive into their performance and find out.
Let's do it.
Okay, let's unpack their overall performance first.
Sounds good.
Revenue is up 13% year over year, and operating EBITDA is up a massive 73% year over year.
You're looking at a company firing on all cylinders. Those numbers are impressive.
They are.
But the real story lies in understanding what's driving this success. Take the EBITDA margin growth, for example. It jumped from 12% last year to 18% this year.
Whoa, that's a big jump.
Huge. This suggests Deepak is successfully commanding higher prices for its specialty products, allowing them to improve profitability even with some volume decreases. This is a positive sign for investors looking for sustainable growth.
Wow, a 237% increase in net profits.
Phenomenal.
That's not just impressive, it's phenomenal.
Yes.
This tells me they're doing something right. And their net debt to EBITDA ratio has improved significantly, going from 2.66x to 1.64x.
Think of this ratio like a personal debt-to-income ratio.
Okay.
A lower ratio like Deepak's indicates they're managing their debt and are in a healthier financial position.
That definitely points to strengthening financial health.
Yes, it does.
But a single quarter doesn't tell the whole story.
True.
Let's zoom in on their mining chemicals business.
Okay.
Specifically their technical ammonium nitrate, or TAN.
All right, TAN is a key product for Deepak Fertilizers.
Okay.
It's used in mining and infrastructure projects, which are closely tied to the overall health of the Indian economy. In Q2, their TAN sales volume was down 21% year over year.
Okay.
Now, that might sound alarming.
It does.
But there are a couple of important things to keep in mind.
Okay, I'm all ears. What's going on with that 21% drop?
Firstly, this was partly due to a planned shutdown for maintenance, and more importantly, a capacity enhancement project.
Okay.
They're increasing TAN production by 10%.
Got it.
Bringing their total capacity up to 587 KTPA.
KTPA?
Kilotons per annum. This capacity expansion is cleverly timed, wouldn't you say?
It does seem strategic, especially with the expected post-monsoon surge in demand for TAN. Power plants, cement manufacturers, steel producers, all industries that rely heavily on TAN will need to replenish their stock.
Exactly.
So they're positioning themselves perfectly to capitalize on that demand.
Yeah, they are.
Speaking of strategic moves, let's examine how this shift towards specialty products is playing out in Deepak's industrial chemicals segment. This segment saw a 9% year-over-year increase in revenue. However, volumes actually decreased for both nitric acid, down by 1%, and IPA or isopropyl alcohol, down by 10%.
Interesting.
Wait, how can revenue be up when sales volume is down? What's the magic trick here?
That's the specialty transition in action.
Okay.
They're selling higher value products that command better prices.
Okay.
Even if they're selling slightly less volume overall.
Got it.
The numbers tell us that their specialty stainless steel grade nitric acid is doing well.
So they are making up for the lower volume with higher value products?
Exactly.
Clever.
Plus, a new 5-year anti-dumping duty on imported IPA is expected to further boost demand and pricing.
Anti-dumping duty?
Yeah, anti-dumping duties are essentially tariffs that protect domestic industries from foreign companies selling goods below market value.
Okay.
This duty will create a more level playing field and allow Deepak to potentially increase their sales.
Interesting. This segment really showcases Deepak's strategy in action, finding ways to counterbalance those price fluctuations in the commodity market.
Right.
By shifting towards these higher value specialty products.
Exactly.
Now onto the segment where Deepak seems to have hit it out of the park, their crop nutrition business, or CNB.
This is where it gets really exciting.
Okay, tell me more.
They hit record-breaking sales volume in manufactured bulk fertilizers and 83% year-over-year increase.
Hmm.
Now, if you're a farmer, you know the impact of the monsoon season on crop yields.
Yeah.
And Deepak seems to have capitalized on that perfectly.
If you're a farmer, Deepak is looking like your best friend right now.
It seems so.
But they're not just selling more.
Yeah.
They're also seeing strong growth in their specialty products, right?
Absolutely.
Yeah.
Crop tech, for example, is up 70% year-over-year.
Wow.
And Bensulf is up 7%.
So these specialty products are tailored to specific crop needs.
Yep.
And often command premium prices.
That's right.
So Deepak is firing on all cylinders in the crop nutrition segment.
They are.
What's their outlook for the rest of the year, especially considering they're operating in a global market with those constantly fluctuating raw material prices?
Well, ammonia prices were up about 11% year-over-year.
Okay.
While MOP, or muriate of potash, was down about 40%, gas prices also saw an increase of about 9%.
And how is Deepak handling these fluctuations?
But Deepak's integrated ammonia plant is proving to be a valuable asset,
Okay.
helping them control costs and navigate these price swings. They've also been proactive about strengthening their balance sheet.
In what way?
They've made a prepayment of 200 crores in debt. To put that in perspective, that's roughly $25 million US, a significant chunk of change that shows they are serious about strengthening their balance sheet.
That's good news for investors. But Deepak isn't just focused on the short term. They've got some ambitious expansion plans in the works, don't they?
Absolutely. They've got two major projects underway representing a total investment of Rs 4,500 crores.
Yeah.
First, there's the TAN project in Gopalpur, Odisha.
Okay.
This is expected to be commissioned in the second half of fiscal year 2026
Got it.
and will make Deepak the third largest pure-play TAN producer globally.
Wow, that's huge. What about the second project?
The second project is a nitric acid project in Dahej, Gujarat,
Uh-huh.
also expected to be commissioned in the second half of fiscal year 2026.
Okay.
Once completed, it will position Deepak as Asia's largest nitric acid manufacturer.
Wow, talk about thinking long term. These are some serious investments.
Yeah.
It really signals their confidence in the long-term growth of these sectors and their commitment to securing a dominant market position. But with such aggressive growth plans, it's natural to wonder about the company's leadership. Any news on that front?
As a matter of fact, there's been a significant development. The current CFO, Mr. Deepak Rastogi, is stepping down. His last day with the company will be in January.
That is big news. Who's taking his place?
The incoming CFO is Mr. Subhash Anand, who's currently the president of strategy at Deepak.
Okay.
He's got a very impressive background, a qualified AICWA from India, and a certified management accountant from the Institute of Management Accountants in the U.S. Over 30 years of experience, including leadership roles at companies like Hero Cycles, Solar Active Pharma PI Industries, and Whirlpool of India.
He certainly seems to have the experience and expertise to steer Deepak through this next phase of growth.
He does. This is a key leadership transition, so it'll be interesting to see how Mr. Anand shapes the company's financial strategy going forward.
For sure. But before we move on to the chairman's message
Okay.
and dive deeper into those new projects,
Mhm.
let's take a moment to reflect on what we've learned so far. What stands out to you?
Well, while the CNB performance is certainly a highlight, it's worth remembering that all three segments contribute to Deepak's overall success. I think it's fascinating to see how these segments might be interconnected, potentially creating synergies that benefit the entire company.
That's a great observation. Let's explore those potential connections as we examine Deepak's future outlook.
Sounds good. Picking up where we left off, let's delve into the chairman's message.
I'm ready to hear what the chairman has to say. They must be pretty pleased with these Q2 results.
Indeed, the message highlights their impressive Q2 performance, particularly the success of their crop nutrition business, and reiterates their commitment to the transition toward specialty products. They are optimistic about future growth and are placing a big bet on the upcoming Rabi season.
Rabi season. For those of us who aren't familiar with Indian agriculture, can you explain what that is?
Of course, the Rabi season refers to the winter cropping season in India, is when farmers plant crops like wheat, barley, and various pulses and oilseeds with improved groundwater levels and irrigation across the country. Deepak anticipates increased demand for fertilizers, especially for cash crops like sugar cane and onions. This is where their focus on specialty fertilizers tailored to the needs of specific crops and regions really comes into play.
So they're not just betting on a good harvest, they're betting on farmers choosing their specialty products to maximize their yields.
Smart. Exactly. It's a targeted approach, and it speaks to their understanding of the market. But while we're talking about Deepak's confidence in India's growth story, let's not forget that they're operating in a global market, and there are always risks involved.
For sure, the global economy can be unpredictable. But Deepak Fertilizers has over 4 decades of experience in this market. They've weathered economic storms before, and they seem to have a solid understanding of the risks and opportunities in India.
You're right. Experience counts for a lot in this industry. And speaking of less tangible factors, Deepak's commitment to sustainability and social responsibility might actually give them a competitive edge in the long run. It's not just about profits anymore. People want to invest in companies that align with their values.
I was just thinking the same thing. It's almost like a hidden asset, something that doesn't show up on the balance sheet but could have a real impact on their future performance.
Precisely. It's about building a company that's not just financially strong, but also resilient and adaptable to the changing expectations of investors, customers, and society as a whole.
Well said. It seems Deepak is trying to strike a balance between aggressive growth and responsible business practices. But speaking of aggressive growth, let's go back to those 2 major projects they have in the pipeline. The TAN project in Gopalpur and the nitric acid project in Dahej.
Both projects are significant investments and demonstrate Deepak's commitment to becoming a major player, not just in India, but globally. The TAN plant in Gopalpur will not only make them the third largest pure-play TAN producer in the world, but its strategic location will also give them an advantage, being closer to major mining areas in East India and having access to a port for export opens up a world of possibilities.
And the nitric acid project.
Equally impressive, the Dahej plant will position them as Asia's largest nitric acid manufacturer. It's strategically located near major consumers in West and Central India. Plus, they've already secured a 20-year long-term contract for 65% of the plant's concentrated nitric acid capacity.
That's a smart move, locking in those long-term contracts. It shows real foresight and planning. But these massive projects, along with their debt prepayment, make me wonder about their overall financial strategy. They seem to be playing a bit of a balancing act, making huge bets on future growth while also being quite prudent with their finances.
That's true. It suggests a certain level of discipline and a long-term perspective. It's not just about maximizing short-term profits. They're also thinking about building a solid foundation for sustainable growth.
Which is probably reassuring for investors. It's a sign that Deepak's management team isn't getting carried away by all the hype surrounding India's growth story. They're keeping a level head and making sure they're well positioned for whatever the future holds.
Exactly. Remember, they're operating in a highly cyclical industry. Both chemicals and fertilizers are susceptible to global supply and demand dynamics, so it makes sense for them to be a bit cautious, even while pursuing aggressive growth.
It's a smart strategy. Speaking of strategy, I'd love to hear your thoughts on the incoming CFO, Mr. Subhash Anand. His resume is incredibly impressive with over 30 years of experience in leadership roles across various industries.
He certainly seems well-equipped to steer Deepak through this next phase of growth. His expertise could have a significant impact on the company's financial strategy.
Absolutely. It'll be interesting to see what kind of stamp he puts on the company. Will he maintain the same level of financial prudence, or will he be more inclined to take on additional risk to accelerate growth?
Only time will tell. But given his background and Deepak's current financial position, I'd say they're in a strong position to navigate whatever challenges and opportunities come their way.
I'm inclined to agree with you. Before we wrap things up, I want to circle back to something we talked about earlier. Deepak's transition from commodity to specialty products. Is this a trend we're seeing across the entire industry, or is Deepak somewhat unique in this regard?
It's definitely a trend, but Deepak seems to be ahead of the curve. Many chemical and fertilizer companies are trying to move up the value chain to differentiate themselves and reduce their exposure to those volatile commodity prices.
So Deepak is sort of a bellwether for the industry.
In a way, yes, their success in this transition could serve as a model for other companies looking to make a similar move.
And wouldn't that be interesting to watch? Imagine the ripple effect if other companies start emulating Deepak's strategy. It could reshape the entire Indian chemicals and fertilizers landscape.
Now, that's a thought-provoking idea.
It is, isn't it? Okay, I think we've squeezed every last drop of insight from these Q2 results, but I want to leave our listeners with one final question to ponder.
Always love a good cliffhanger. What's the question?
We've talked a lot about Deepak's impressive financial performance, their ambitious expansion plans, their commitment to sustainability, and even their new leadership. But what about the competition? How are Deepak's rivals responding to these moves? Are they feeling the pressure? Are they trying to catch up? Or do they have entirely different strategies in mind? That's something I'm going to be keeping a close eye on.
Excellent point. It's always important to consider the competitive landscape. Deepak might be doing all the right things, but if their rivals are even more agile and innovative, It could change the game entirely.
Exactly, and that's the beauty of the business world. It's dynamic, unpredictable, and always evolving.
And that's why we love doing these deep dives. It's about more than just crunching numbers. It's about understanding the story behind those numbers, the strategies, the risks, the opportunities, and the human element that drives it all.
Couldn't have said it better myself. We've covered a lot of ground in this deep dive into Deepak Fertilizers Q2 FY25 results, but there's always more to explore.
Indeed, what we've uncovered today is just one chapter in their ongoing story.
I'm already looking forward to the next chapter, but before we sign off, I want to emphasize one last thought for our listeners.
I'm listening.
We've seen how Deepak Fertilizers is successfully transitioning towards specialty products, becoming a leader in sustainability, and making strategic moves to solidify their position in the market. But the question that lingers in my mind is this: will these efforts be enough to withstand the challenges of a rapidly changing global landscape? Climate change, geopolitical instability, and evolving consumer demands, these are all factors that could significantly impact Deepak's future.
That's a great point to leave our listeners with. While Deepak is doing a lot of things right, the future is always uncertain. How they adapt and navigate these emerging challenges will ultimately determine their long-term success.
It's a reminder that even in the face of impressive performance, the need for constant evolution and innovation remains paramount. As we wrap up this deep dive into Deepak Fertilizers Q2 FY25 results, I'm struck by their commitment to walking the walk, not just talking the talk.
Absolutely. They're not just throwing around buzzwords like, sustainability and specialty transition. They're actually putting in the work to make it happen.
Right from the beginning, we asked that big question. Is Deepak Fertilizers genuinely transitioning from commodity to specialty products?
Yeah.
Based on everything we've discussed, I think the evidence points to a resounding yes.
I think so too. Across all three business segments, we see it.
Mining chemicals, industrial chemicals, and crop nutrition.
Exactly. We've seen clear signs of their successful shift towards higher value specialty products.
And their impressive EBITDA margin growth tells that story.
For sure, they're not just growing revenue.
Right.
They're also becoming more profitable.
And they're achieving this while navigating a volatile global market with fluctuating raw material prices.
Yeah, it's not easy to do, that's for sure.
That's no small feat.
It's not.
So it really speaks volumes about the strength of their strategy and the agility of their management team.
It does.
They're anticipating market shifts and positioning themselves accordingly.
Right. And it's not just about experience, it's about vision and adaptability. Deepak seems to have both in spades.
So just to circle back to our initial question, yes, Deepak Fertilizers is putting their money where their mouth is when it comes to transitioning from commodity to specialty products.
Absolutely. And they're doing it with a commitment to sustainability and social responsibility. It's clear they're building a company that's not just financially strong, but also ethical and mindful of its impact.
It makes their story even more compelling. Deepak is proving that it's possible to be ambitious and profitable without sacrificing your values.
Right. It's a message that resonates with today's investors, customers, and stakeholders.
So as we wrap things up, what key takeaways should our listeners keep in mind as Deepak Fertilizers continues on this growth trajectory?
I'd say there are a few things to watch closely. First, the execution of those two massive expansion projects, the TAN project in Gopalpur and the nitric acid project in Dahej.
Those are big ones.
They are. These are significant investments, and their success will be crucial for Deepak's future.
Absolutely. Second, the impact of the new CFO, Mr. Subhash Anand, his leadership and financial strategies could significantly shape Deepak's direction.
And don't forget the competitive landscape. How will Deepak's rivals respond to their success? Will they try to emulate their strategy, or will they chart their own course?
All excellent points. The business world is dynamic and unpredictable. It'll be fascinating to see how this story unfolds.
It really will be.
It's a reminder that even in the face of impressive performance, continuous evolution and innovation are essential.
Could not agree more.
Well, we've learned so much about Deepak Fertilizers' journey in this deep dive.
We have.
They've positioned themselves as a leader in the Indian chemicals and fertilizers sector.
Definitely a company to watch.
Their commitment to specialty products, sustainability, and strategic growth makes them a company to watch.
Definitely.
Thanks for joining us on this deep dive into Deepak Fertilizers. We hope you've gained valuable insights into their performance and future prospects. Until next time, keep learning and stay curious.